Hey all, before we begin, I've got some exciting news to share. We've been working on something a little wild behind the scenes. It's called Unchained On Air, a revamped live stream series and podcast feed that takes you way beyond the headlines. It features sharp, maybe even controversial, takes on major events and the kind of on-chain intel that never makes it to your feed. Way more shows, way more often, each one laser focused on a different slice of crypto and finance. First up is Dex in the City, where the wallets are cold and the takes are hot, with Jesse Brooks, Catherine Kirkpatrick-Boss, and V. Lee. Three powerhouse lawyers gathering to dish about the latest from DeFi enforcement to token regulation and everything in between. It live streams every Tuesday at 12 p.m. ET. Second is Uneasy Money, because what happens on chain never stays on chain, with Luca Netz, Kain Warwick, and Taylor Monahan. Three OG DeFi builders unpacking everything happening on-chain, from tokenomics to DAOs, from hacks to yields. It airs Wednesdays at 3 p.m. ET. And finally, Bits and Bips the Interview, an addition to our group chat show, in which our executive editor, Stephen Ehrlich, takes you deeper with one-on-one conversations. This streams on Thursdays at 12 p.m. ET. To catch the live streams, follow Unchained on X, subscribe on YouTube, or find us on your favorite streaming platform now. And don't forget to hit the bell icon so you never miss a show. And if you can't make the live stream, these episodes will show up in your podcast feed the very next day. Thanks, as always, for your support.
Someone's on the other side of this making money. And so you have to make a decision between whether or not you want your venue to be perfectly efficient, or whether you're willing to take some risk to tamp down the volatility a little bit when it comes to liquidations. And it seems like Hyperliquid is saying, like, too bad, so sad. We're not doing that. Hey everyone, I'm Kain Warwick, and welcome to the second episode of Uneasy Money, because what happens on chain never stays on chain. This is a show where we dig into what's really happening on chain, the experiments, the incentives, the chaos, and the innovation driving the next financial system. Each week, I'll be joined by Luca Netz and Taylor Monahan as we talk tokenomics, DAOs, yield, security, and everything in between from people actually building in the space. One quick thing before we start: nothing you hear on Easy Money is financial advice. We're just three builders talking about what's happening on chain, and we want you to always do your own research before aping in. You can find all our disclosures at unchaincrypto.com/uneasymoney. All right. Hey guys, how are we doing?
Hey.
Hanging in there.
I wonder if we're going to do that in the intro, which episode it is every time. This is episode 386.
At some point, we're just going to forget to update it, though.
Yeah.
We're going to have like fourth episodes.
Yeah, exactly. So let's talk ICOs quickly. We've had a very interesting few weeks for ICOs. The ICO meta is back. I think we had the Mega ETH ICO, which we talked about last week. This week, Monahan and Aztec are doing ICOs on different platforms. So Mega ETH was on the Sonar platform. Monahan is on the new Coinbase platform, which you could be forgiven for being confused about because Coinbase also bought Sonar, but this is on a different platform that Coinbase built independently. It took me a couple of days to unpack that one myself. And then Aztec is running their own ICO, which is like a node sale or something like that. Let's dig into that. I think the Monahan ICO has been interesting because the price was, I think, maybe relatively high given market sentiment right now at 2.5 billion versus Mega ETH that was 1 billion. It's taken a little bit of time. It's still not fully sold out. What are our thoughts on this new ICO meta?
Super bullish on the ICO meta because I think this idea of not putting your money where your mouth is and expecting huge upside, I think, is a fallacy that I think Web3 ran with, that I think was not healthy. So I do like this idea of ICOs in general. I like the idea that Coinbase is doing it because you kind of have that, Legion and CoinList and others have been doing it for a while. But Coinbase doing it feels like you're safe and that you're not going to get like popped 4 years from now or 2 years from now for doing it. Feels like, dude, this publicly traded $100 billion company empowered me to do this. So I'm doing it now. And like, like if I'm not allowed to do it, then like, what are you doing letting this huge $100 billion publicly traded company, enabling me to do it? So I like that.
Well, at least if Gensler V2 comes after someone, they'll come after Coinbase, right? They're probably not going to come after you personally. So it's a bit of cover fire, I guess.
Little bit of cover fire, and I like it because I think we might have spoken about this last week, but this just idea that like getting huge, life-changing, generational returns in public markets just aren't there the same way they used to be. And one of the beauties about crypto has just been that ability to allow people to get in really early, which I think would be like my only reservation with the Monahan ICO is
right. Is the prices.
Yeah, it's like too high, man. You gotta do these prices where it's not just an easy double, right? Like it's an easy 4, 5, 6, 7x. I think we're kind of misconstruing the beauty of, the ICO mechanic if it's done at those type of prices. But I do understand community alignment, and if it's going to fill, it's going to fill. It probably will end up filling.
Well, there's an argument that like the way that the Coinbase fill from the bottom setup has been done, it kind of encourages people to wait, which people wait anyway. Like I think Mega ETH, I looked at it, and there were like 20,000 people that had gone in. And then in the last like 24 hours, it was like another 30,000. It was like more people went in the last 24 hours than went in the first like 4 days or something. So I think people in crypto feel very high opportunity cost of having capital locked up. And so I actually, maybe the Mega ETH money is still locked up. I don't know. Have they released that yet?
I don't think it's all released. I think they're on the precipice of release. It's like on the verge. Okay. It's right there.
I saw a couple of jokes that they might just hold it until the Monahan sale is over, which feels very adversarial. But
yeah, okay. Do you guys understand? I don't understand. There was drama on the timeline. I think like the other launch pads or whatever were kind of like ragging on the Monahan sale for not selling out instantly.
Yeah.
But then there was other people saying like, oh no, but it's fine. And this is like, why, like the way that the mechanism was designed was not designed to like FOMO everyone and sell out. And you're actually better waiting. Is that right?
I think that's right. I think, but to Luca's point, the price is the price though, right? Like 2.5 billion is pretty high. Like, go back to the EOS ICO, which is my favorite ICO of all time, right? That went on for a year and raised $4 billion. There is a point where I think as you said, Luca, like there isn't really the potential for, this is the equivalent of like an IPO that, some like OpenAI IPOs at $1 trillion. And it's like, cool. Okay. Like, thanks, I guess. Like, hopefully it goes to 2 trillion, but like, there isn't that kind of early stage sense of, you're getting in at a cheap price, right? Where there's a lot of upside.
I do think it'd be great for listeners. Can you actually like explain the EOS ICO, like how that worked, how they were able to keep it going for a year? I think that's actually a really good story.
So back in the ICO era, right? EOS turned up and said, we're going to do an ICO. And people were really excited for this, right? Like this was a new network. This was like one of the first post-Ethereum Alt-L1 kind of projects that people were really excited about before like BSC, before Solana, before a lot of these things. And they were going to take a different approach, be more centralized. Shockingly, that was the different approach. Have fewer validators. It was going to be proof of stake. And there was this period through like 2018 where it was one of the hottest projects, right? And so the ICO meta was everyone does an ICO through 2016, 2017, 2018. So I think the ICO for them started in early 2018, But they did this mechanism, and it's funny, like ICOs back then, there was actually quite a bit of innovation in the way that the ICOs were designed, right? Their innovation was, how can we max extract? And so they did this ICO where every week there was an auction for EOS tokens. And so the auction would start, it would run for a week. People would place bids throughout the week, and then the auction would close, and then another week would start. And it ran for a year. Which
it was insane.
It was insane,
because
right?
Prior to this, the way that it worked was that you would have this up-and-coming project. They would start getting their name out there. People would start talking about them. They would start shilling themselves, and you figure out whatever the hell they're doing. And then they would based on a variety of factors, they would then sort of figure out how much they wanted to raise. And that was the defining thing. And so it was oh, we're going to do a $5 million or a $15 million or $100 million or whatever it was. But there was always a cap on it. And so in mid 2017, it was Brave and Status and all these big ones. But the big ones were still $100 million. And they would sell out
50 to 100 was the max that people could pull off, right?
Yeah. And it would still sell out instantly, or nearly instantly. We're talking minutes to hours.
Minutes to hours, yeah, exactly. Yeah.
And then EOS comes along and is basically wait, why is anyone capping this?
Yeah. Oh, so I think there's two crazy outliers in this era, right? Gnosis is one. Maybe Polkadot you could throw in there, right? But Gnosis is one, and Gnosis is another outlier, not because they were trying to max extract, but because they kind of hit the peak of FOMO, and they created this reverse Dutch auction where the percentage of the supply, this is classic Koppelman, we're going to solve this problem through math and incentive design. Martin Koppelman's the founder of Gnosis, one of the founders. Stephen George is the other one, and so they designed this system where instead of, to your point, Tay, having to decide up front how much to sell at what price, they would have this reverse Dutch auction, and it basically sold out in 2 minutes. They raised,
because in theory, you're supposed to wait. The whole mechanism design is forcing people to wait. Because the
no
second that and then and it was one of the most peak genius cryptographers meets crypto hype, because the cryptographers,
degens and the cryptographers just did not.
They're rationally, you have to wait, and then the degens were everything goes offline, all the money goes in instantly, and the theoretical researchers are
they raised 400,000 ETH.
Yeah,
they raised 400,000 ETH, and they sold single digit percentage of the network or something like that, right? and then I think everyone was all right, we're never doing auctions again. That was a failure. But they still have 300,000 ETH, so well played. So EOS goes, okay, what if instead of doing one ICO, we did 52 ICOs and made them a week long? And then they raised $4 billion. And I don't even know what the implied FDV was by the time it finished. Everyone was just over it. It would every few months, people would remember that this EOS ICO was still going on. And so the other thing that was really interesting about it is people were because we didn't have the technology back then to track anything happening on chain. And so people were they're just putting their own money back in because they could pull the money out every week. So every week the auction would finish and they could withdraw the money. And people were is this just them rebuying the same tokens over and over and over? Because sometimes the price would go down for the auction and then it would get bid up at the last minute. Anyway, ICOs, crazy times.
Okay, but wait, hold on. Today it's better though, right? We're
way better. No, way better. It's definitely better. We've got better ICO technology. I think, the thing that was really interesting to me about both Echo and Sonar is Kobe designed both of those systems with ICOs in mind, right? Obviously, he was there throughout all of ICOs, and he was I'm trying to build a system that is going to actually make it more accessible, right? I'm going to try and remove some of the perverse incentives in here, and yeah, I think that kind of worked.
Yeah. Well, and like Kobe, I mean, he really lived through it, so I am excited for the continued. I don't know. We do this thing where we like go all the way to the moon, and it's insane and bad, and then we like forget about it, and then we come back in a more stable, better, like actually solving problems.
Markets take time. So, Luca, I have a question for you. You did an airdrop launch of the Pengu token in 2024, early 24. Is that right? End of 24. Oh, wow. Okay. Wow. It feels like it's a lot longer than that. So if this ICO meta had returned, would you have considered doing an ICO instead of an airdrop?
No, because not for the story that it's trying to tell, right? Like the story of Pudgy Penguins is that it's the mascot and base crypto and the people's coin, right? So the people's coin is conceptualized through the form of generosity, right? And like giving and not taking. So this meta does, I think, make us look at other things that I think are a little bit different, right? Like we have Abstract, we have other companies in the Igloo, and so we're just looking around, right? Like obviously, I really like the mechanic of, airdropping the most loyal supporters, and then obviously having an ICO for the opportunists and the traders. I do like that balance, but Pengu specifically, just in its form factor, I also don't think it would have been as successful. I don't think where it's going to go. I think if you would have done it any other way, I think would have handicapped it from going to where I think its future ultimately lies.
Interesting.
But I do function because it's a community coin, right? It's a community. It's a proxy of community. I really believe that. But I do believe that in a world where the ICOs have come back like they've come back today, it's almost irresponsible from a founder perspective to not really take these things seriously, especially if you're more of a, technically driven, business driven, type of protocol driven, type of token versus I think we're in a very unique category.
Right. You're not trying to generate revenue and build some weird DeFi scheme or something like that.
Yeah. It's a proxy of impressions. And do you believe that we are the next iteration of Mickey Mouse? And is do you believe in the meme and the culture that is the token versus, nobody's underwriting Pengu because, we're going to do $50 million a year in revenue this year, right? Like, you're not, if you did, I'd be like, you're kind of,
you're getting it wrong.
You know better than me. A lot of these guys are way dumber than everybody knows. There's some people who have underwritten it in such a way, but
But it wouldn't be 50 million, it'd be $50 billion in revenue a year, right? Like that's like the left curve take is like so to close this ICO meta out, right? The other side of the spectrum, it was Aztec, or Aztec is about to do their ICO, I think, in a couple weeks, and they started with an FDV of 350 million, which again, to go back to your point, Tay, like the ICOs, they would raise like Brave or whatever, they would raise like 50 million, 100 million, selling like 50 to 60 to 75% of the token supply, right? So these were like FDVs of like 50 million, 80 million. Like the Haven token, the FDV was like 60 million.
So I have a question, Kain. Were those fully unlocked the second that they came out?
Yes. Yeah. Yeah. I know. You would think like it was so wild. It was so wild.
Dude, that was like people. Okay, this is the thing, is like there was this tension between the true believers and the people who had been in Ethereum for a while, and then like sort of the newer, fresher faces, or just the people who were there more for the financial gains, right? The people that were true believers were like, it doesn't have a product, it's not going to ever ship. They're like, there's nothing here, and then the other guys would be like, yeah, and then the true believers would be like,
Yeah.
What?
They'd be like, you can't do this. You're ruining our network.
Why would you buy it? The answer obviously was because you could literally sell it at like minimum 2x instantly.
Yeah.
But oftentimes if it was a really like if it sold out, you could sell it like 10x, 100x, within days or hours.
It would be hard. It would be hard. You would have to stay up until 2 a.m. especially.
You had to click.
Yeah, you had to click really a lot. Things would go down. Like the website would go down. The chain would get congested. Like there were some where like gas price spiked.
Yeah, right? Gas prices would spike.
Can I run a theoretical by you guys? And I want you to, and I just want to underwrite it. Because I know you'd give me good advice as a friend and as somebody who's like aligned. But let's say I had something really special cooking, really special, and you take me at face value that. And I told you, and I said, Kain, I wanted to ICO it. I wanted to raise 50 million at 75 million FDV. And I wanted to give it all out. As somebody, you know me to be a high integrity guy who's here long term. I really just want to help shape the space for the better. Would you advise me, because outside of that mechanic being really exciting for like a week or two, right? Like, do you think like the long-term success of that, can something actually in terms succeed through a function, through a mechanism like that? Like, would you advise somebody like me to go and do it that way? Or you're like, nah, it's just really fun for 3 weeks and if not, it's going to blow up in your face.
Look, it's a bit of both, right? And the reason why I asked you about airdrop, we talked last week about airdrop versus ICO, right? And there is absolutely a psychological difference. To your point, Tay, yeah, there were a lot of flippers, but there were a lot of people like, I guarantee you, if you go through the chain, there are a lot of people who bought the Gnosis token in 2017 and have never sold it. Like they swapped their ETH and they've just literally been like diamond handing it for that entire time, right?
Yeah. I have like hundreds of these, by the way. Hundreds.
Yeah.
Literally hundreds of tokens. I'm like the all-time diamond hander. And 90% have gone to literally zero.
So it's like okay, you sell a token to people very cheaply, right? And it's you're talking 75 million FTV, 100 million FTV these days, and that was sort of the point I was making. Like Aztec feels cheap at 350 million FTV, right? Like the times have changed. Like there were ICOs that were doing like 20 mil FTV, 10 mil FTV. Like they were, it was just a different era. So selling tokens to something that people have any kind of long-term belief in very cheaply, there's two components to this. One, okay, how do you decide who gets those tokens? And this is one of the challenges, right? Like there were a ton of ICOs in late 17 where it was like, and not an auction. It was just, put a ticket in and it was a lottery system who would get access. There were a bunch of different ways that this could play out. But let's say that this was something in the Pudgy Penguins ecosystem, right? If it were me, I would say if you hold a Pudgy, you get an allocation into this ICO, right? That was kind of the point I was making about Pengu, right? Is like if you hold a Pudgy, rather than airdropping it to you, you're allowed to buy Pengu at, I don't know, 50 million FTV, right? The difference there is that you have bought a thing, and there's two components to it. One, you have a cost basis, so you believe like you had to choose to buy the thing. But the other thing is you feel like you made a good investment that went up, and therefore you want to hold on to it versus someone gave you free money that you now need to dump to realize. It's just a different mindset.
Yeah, and it's different today because they're like, I'm sure there were some amount of automated systems that were buying these ICOs, but the vast majority of the ICOs was actually like very, very manual, which is just insane to think about. And every time I like recall this, I have to like go check myself because I'm like, there's no way. But it was actually, there wasn't this MEV land. There wasn't this understanding.
Yeah.
Like it would take years for that, like even early DeFi really like it had like manual back running and stuff, right? It took us years to get to that point where like, but if you were to do an ICO today in the same way that we were doing them back then, it would just be like, I mean, we saw this with NFTs a bit, right? Like you just like the bots and the like it's all automated.
Exactly. That's the hard thing now, is like figuring out like what would the mechanism be, right? So yeah, it's do you remember Civic? The Civic ICO?
Yeah.
So the Civic ICO was an interesting one because it was like this 3-day period where you had to register and wait, and then the distribution of allocations was like capped, but then there was a weird bidding phase. That to me was like the peak of people trying to get into a very small door. And there were like hundreds of thousands of people that tried to get into that ICO, and like 5,000 people got an allocation. It was like today that you just couldn't get away with that. And then what did they do? They literally released like a vending machine.
Yeah, I think that's one that just died quietly. It was like, I don't but yeah, it's like also what's the point of the ICO? Do you want like fair distribution? Do you want to create the market? You want the price? You want founder exit? Do you want community? You want loyalty? Like, what exactly are you going for? For a lot of the early ICOs, it was like, it's kind of like a seed round. It was kind of like a PR community building thing.
But not like a seed round, but where you sold all of the tokens up front and never raised again, which was, not the smartest tactical. Like, part of the reason I think so many of them went to zero, right, is like you raised $10 million and you think $10 million is a lot of money. And it definitely was back then, but like 2 years later, especially because everyone raised in ETH, right? So this is the other ICO dynamic that people forget about, right? Every single ICO was denominated in ETH. We didn't have stable coins. We didn't have stable coins during the ICO meta.
Yeah, it was all ETH.
It was
don't
all
remind me, Kain. I have so many tokens that are zeros now. Like, don't tell me how much they were worth in ETH.
USDT was on the Omni network. It was on a different network. It wasn't. There wasn't $60 billion of USDT sitting on Ethereum mainnet, right? So ETH was the only medium of exchange we had. And so everyone raised in ETH, which was a huge ETH sink, which is why the price of ETH went up, which is why people could then raise more, et cetera, and then it all unwound, and here we are. Still.
Yeah, so like if you raised in late 2017 when the price was like 500, the price of ETH was like 500 to 1,000. A year later, ETH was what, down to 200?
80? Well, I mean, in December,
eventually it would go down to 80.
Yeah.
So you didn't raise $10 million anymore.
I mean, Haven,
like 1 million.
We raised 30,000 ETH, right? So 30,000 ETH at $980, which was $30 million.
This was you. You were at the top.
This is me. I was there. That's me. You're literally describing me. So we raised 30,000 ETH at $980. By the time we got to 2018, if we had done nothing, it's worth $3 million.
Yeah.
Imagine that. You're sitting there a year later being like in a smoking crater, and you're like, what have I done with my life?
And also, like, you sold like all of your, like, everything.
Yeah. It was crazy.
You sold it right when it filled. You basically just denominated it from ETH to dollars. You didn't hold it until 4,000 ETH.
No. So, well, I mean, like,
you have payroll and like
expenses. There were expenses, right? So my favorite part about this, right, is that obviously Synthetix is still here today, so we didn't run out of money. But it was. I remember sitting there in 2019. It was like Feb 2019, and we were looking at our runway, and it was down to like months at that point, right? And Jordan, my co-founder, is like, okay, I've got a plan. Like, we can cut costs. Like, we're gonna, figure this out. We'll cut, the team down to like 5 or 6 core people, engineering or whatever. And I literally looked at him. I said, listen, we have 6 months to either make this work or it's dead anyway. Like, if we kind of try and extend that to 9 months, is not going to make a difference. We need to throw everything at this. And I said to him, I was like, I will plow this thing into the ground. And he was just like, I don't even know what to say to your side.
No, but you want to know what, Kain? Okay, keep going.
Yeah, no, that's it. And so I did. And like at the last second, we pulled out of this death spiral and survived.
there's a common denominator here, because I almost told my co-founder the same thing verbatim. And it was a little bit a different context, but we basically bought Pudgy, FTX blew up, we were going broke, we had to put another $1 million into the business. And he was doing this thing of like 2 years runway. Yeah. And I said, Lorenzo, by the time we survive 2 years in crypto, we would be irrelevant and this whole thing will be cooked. And so our strategy basically, even today, is like, I'm fully all in. This whole like 3-year runway thing in crypto, you don't survive 3 years if you're not staying relevant and keeping top of mind. I don't run 3-year run. I mean, now we've been able to capitalize the business well enough where we can run at that run rate. But I tell these guys, you got to put it all on the line, because if not, the community, the space will chew you up and spit you out. You don't have years to figure it out.
Yeah, you got 6 months. Exactly.
Yeah.
6 months.
So it's ironic you say that. It's pretty interesting, because I do think that's a really interesting factoid and common denominator that I haven't heard many other people say, but since you mentioned it, I think is so critical for at least our success. Was like, dude, we had to put it all on the line. And that's what kept us out shipping everyone. At a certain point, everyone was looking around in NFT land being like, dude, you're one group is out shipping everyone. Exactly. Right? And it was because I was just putting it all on the line every time.
Yeah, because you cannot wait, and you can't because if you survive 3 years, like that doesn't actually get you. Like, what are you going to do at the end of the 3 years? Like that doesn't.
Survival in crypto is nothing, right? There's plenty of ICOs that survived 3 years, and no one's ever heard of them, right? Like they were just like inching pennies, and then eventually they died anyway. Because you have to have attention in crypto. If you don't have attention, it's not going to work. I was just going to say, I remember that picture of you with all the Pudgy toys in Walmart. And I was like, this guy is like insane. How did this happen? Like my mind was blown. Like I saw that tweet and like my head exploded. I was like, how did he get an NFT into Walmart? Like what is happening right now? So yeah, definitely worked.
And I shouldn't have done that, but I put it all on the line, right? I basically said, I was like, because theoretically, just one last point to this before we switch topics is like, I was way too small to be in Walmart at that.
Yes. Yes. This is before any goes anywhere.
Yeah. So the risk that I was taking, and we underwrote it as such, which is we either are not going to do this and miss our biggest swing at bat, or we're going to do this and risk blowing up our relationship and completely flopping in mass market retail, because there's almost no way we can sell 1 million toys. Thankfully we did. We've been in there for now 2.5 years, but had to put it all on the line. If not, I would have been cooked, and a lot of things probably wouldn't have happened the way they did. So put it all on the line.
So let's move on. Next topic. People leaving hype. There's been a bit of hype FUD around the white whale, who one of probably like 10 large anon traders, which is it's a really interesting dynamic with Hyperliquid, because all of the trades are on chain. You have these people like James Wynn, the white whale. There's a few of them that trade. They're almost like celebrity traders, right? People can watch their trades, they know their accounts, they can see their P&L. And the white whale, post 1010, the huge liquidation crisis that happened now like 6 weeks ago, which it feels like yesterday, but there was this liquidation cascade that was triggered by Binance and a bunch of different kind of circumstances that obviously cascaded through all of the perp exchanges, but in particular Hyperliquid. There were a lot of people who were liquidated. There was an issue with auto deleveraging where Hyperliquid was designed, and I think Jeff, the founder of Hyperliquid, came out and talked about this and said, we are designing Hyperliquid to be as resilient as possible, right? And this is an interesting question about trade-offs in a trading venue, right? Okay, you've got this tension between protecting the venue itself and protecting traders, right? And it's a little bit zero sum. The more you protect the venue, the harder it is potentially for traders. And so they made a decision. Hyperliquid made a decision to protect the venue, to protect the exchange at the expense of traders. And they said this is just very clearly the the design structure that we've chosen for Hyperliquid. We think it will make the exchange more resilient. We think it will attract more liquidity, etc. But we have some of these celebrity traders who are saying, we don't love this, and we're going to leave and go and trade elsewhere, find places that are more trader friendly, let's call it. Which is again, there's been a few Hyperliquid incidents, I suppose, right? That come out and created a little bit of FUD, and but this is definitely the most recent and one of the bigger ones, I think. Traders leaving the exchange.
Yeah, I think his point, I think it's really interesting that he specifically is talking about, like, he has this emotional and like real connection to like real people who he's either directly talking to or like he's aware are like copy trading him, and like they all got wiped out. And that's, I think, the thing that's like kind of underlying this entire point is, like, when I read his post, at least, like, it's not the biggest part of the post, but I think this is like his story and like why, like, the shift in his mind. He goes, so this thing happened, 1010 happened, like the liquidations happen, everyone gets wrecked, et cetera, et cetera. He's like, but across the industry, everyone's doing victory laps, there's zero bad debt, the liquidations process flawlessly, the protocol didn't die, et cetera, et cetera. And I think he's sitting here like, wait, but like, there's like dead bodies everywhere, bros. What the hell? And to me, like, I don't know, it resonates with me because I have lived that experience so often, where what my personal observations and relationships and like the people are struggling is in direct conflict with what's happening, like what the ecosystem's narrative is. Because as long as the protocol, as long as the tech was good and operating logically and rationally and by the rules or whatever.
I mean, Maker, this was, like there was a long period. So MakerDAO, OG protocol, Sky now, this is, leverage, right? Hyperliquid is a leverage trading venue. Maker was the leverage trading venue of the 2018, 2019 era, and it was all on chain, and so you could see all of the positions. And there used to be these graphs that people would post of at ETH $600, there is going to be, however many hundreds of millions of dollars of liquidations. At 550, there's going to be, $1 billion of liquidations. At 350, et cetera. And you could look at this graph and see the progression. But to your point, Tay, like, that was us. Like, those were our positions that were about to be liquidated. And oftentimes people in the Maker ecosystem would come out and be like, yep, job done, liquidated all of those plebs,
yes, yeah, it was like look at it, ate through that liquidation wall like it was nothing, and I'm like, bro, that's someone's livelihood. What the hell is happening here?
I know, yeah. So yeah, there is. I mean, it's kind of to that same point that you made about the ICOs, right? It's the like mechanism designer, mathematician meets degens, and it's like, wait, someone was recursively levering up through Maker, borrowing and levering up on ETH, and just got wrecked, and probably lost millions of dollars, maybe lost all of their ETH, right? So,
yeah,
I think my interpretation of it was like, he loves Hyperliquid. We all love Hyperliquid. It's a great platform. But after 1010, he spoke to Jeff, and Jeff was not taking the same type of, didn't take the problem, right? The problem that, everyone can get, the systemic design of the exchange, which created or contributed to the problem. Obviously, I don't think Hyperliquid was the problem. I think we kind of know what the problem was at this point. But like, he wants to go and trade on venues where people want to address the systemic problem. Now, I might take the side of this where I actually might fundamentally agree. I mean, at what point, and Arthur from Deviance has had a lot of takes here, and I don't really know what's wrong with these takes. And I would actually love if maybe you guys could steel man the other side of it, because I know he got some pushback on this, but I don't fundamentally understand how you could get some pushback on this. I mean, what you're basically asking for is claiming that there's systemic flaws in the system, and somehow, some way, we have to address it. And we don't need to go and innovate and prophesize on how to do it. There's protocols like Drift and others that are not completely calling your liquidation if something wicks for a couple minutes, right? There's some sort of, it doesn't feel like a circuit breaker, right? Like where the whole thing halts, but there is something in place. And to sit back and to see 1010 happen, and Kain, you would know, because I know, and you probably know more than me just because of how probably more well connected you are than I am. I mean, everyone got smoked. I mean, this is the first time in crypto that I have multiple people message me saying it's over for me, right? Can I have money? Can you loan me money? People asking me for loans. I mean, one of our biggest holders, I gave him money for all of his penguins. And he said, he was like, no matter, he's like, if penguins could go down 9%, I'm going to give you this money back whenever I get this money. And if it appreciates, I'll give you the appreciation for helping me out. I mean, in droves, they were coming to me. And it wasn't like that we deserved it. It wasn't like, we really fucked up this time, right? Like, it actually was a systemic breaking of the system, right? Like something internally broke, which, in one venue that broke things in other venues. And why does everyone have to suffer for what probably ended up being one or two or three people, making a mistake, clicking some buttons or doing some rounding errors on some math, right? Like that should not cost retail tens of billions of dollars. I don't know how that's like a contrarian take.
The interesting point here, though, right, is like, let's look at price action today. So, Bitcoin wicked down to, whatever it was, like 104 on Binance or something like that. And we're at 89 today. And this is unfortunately fundamentally the problem. There were a bunch of people who were long Bitcoin at 20K, and that price was wrong. The market has corrected and said that the price of Bitcoin is now 90K, and you were, 20x levered up, speculating that Bitcoin would go up, right? And so, like we sit back a month later, 6 weeks later, and the market was right. Those traders were wrong, and they would have been liquidated at some point anyway. Now, that's maybe a harsh take.
Let me steelman this, because I can just speak to it anecdotally. I had my Hyperliquid account. I got liquidated on everything. And the stops of my liquidation prices were 95% off of the spot price. So I was like, I'm never going to get liquidated. And if it gets liquidated, I'm going to fill it, right? Or if it gets close to it, I'm going to re-up the wallet and it's crossed. So I'm going to make sure I don't get liquidated. I got liquidated on things that would have never gotten liquidated in any efficient or correct market, right? 100%. So the Bitcoin analogy, it didn't really get affected as much. But basically on anything that wasn't Bitcoin, Sol, Ethereum, or anything in the top 5 or top 6.
Yeah, I mean, Adam went to zero. Like, we've never
literally
seen
zero.
Literally zero.
Yeah,
never happened.
literally zero.
How was that?
Yeah,
right?
and it was all so fast, right?
But
like the wicks were true wicks. It was down and then it was right back up. So even if it continued down over time, you still have to question, like, okay, but that
and margin, and so like
how is that an exchange? If you're an exchange, how is that not your biggest priority to make sure that doesn't happen again? Like, what priority is bigger than that, Kain?
Yeah, I agree. I think it's interesting. We've been reflecting on this at Synthetix now, right, for a while. OG Synthetix, the old protocol, it was a leverage. You had leveraged synthetic tokens, but without liquidations. And the reason why we had no liquidations is because we had this view that the market will almost be induced into liquidating people if you have liquidations, right? So there is a sense, especially on Hyperliquid, that if you can see that liquidating someone is going to be profitable and someone's stop is close, you can get hunted, right? Now there's arguments, well, no, because there's an oracle and it uses external prices, et cetera. But there is something to be said for very efficient, aggressive liquidations induce more liquidations, because people make money from liquidation. I mean, go back to the Maker example, back like the Maker Oracle debacle that happened in, I want to say 2019 or something like this. I'm forgetting my lore a little bit, but there were people who were effectively running those liquidations, running liquidation bots that made like tens of thousands of ETH on this day when there was a liquidation cascade that happened on Maker, the price dislocated, etc. Same thing, right? Like someone's on the other side of this making money, and so you have to make a decision between whether or not you want your venue to be perfectly efficient, or whether you're willing to take some risk to tamp down the volatility a little bit when it comes to liquidations. And it seems like Hyperliquid is saying, like, too bad, so sad. We're not doing that. And so, there's definitely room for other people to come in and say, well, what if we had liquidation insurance? What if we had WIC insurance? What if we had some things that, and there's a cost to these things, of course, right? But if you knew, okay, if Atom goes to zero for a 1 minute candle, I'm not going to get liquidated, because that wasn't the real price. Like, this is what it comes down to. I think, Luca, to sort of maybe distill your point, the price was wrong, and that's not fair that you got liquidated at the wrong price. Like, that's ultimately what it comes down to, right? I got liquidated at 5 cents, and that's not the price. Like, if you look, it's one thing to say Bitcoin, okay, Bitcoin, 104 or 90, like, what is the real price? But like some of these alts, the price was wrong, and I got liquidated at the wrong price, and that just doesn't feel fair. And everyone's willing to kind of take I think everyone's willing to take the risk when they're in a leveraged trading venue, but like, the rules should be fair, and if the price is wrong, then we've got a problem, right? And I think that's ultimately what everyone feels right now, is like, the prices were wrong, I got liquidated at the wrong price. Doesn't feel good.
Yeah. And I think also, like, I think probably from Jeff's perspective and the team's perspective, they are probably more focused on the protocol and the design and the credibility and the trustworthiness and like all these more technical things, because there's a lot of people betting that it won't, like, they'll just end up with like a massive amount of bad debt and fail, right? Like, that's what people are, right? So in their view,
can you steel man Jeff's point, Kain? I'm sorry. What is their take? Like, actually,
okay. So here's,
no, I don't. Well, hold on. I don't think that Jeff is saying, or Hyperliquid, I don't think that they're saying like users should be just like liquidated en masse at the wrong price. I think that they just don't have that on their radar as much as they have everything else on their radar, because since the day that they started building, it's been like Hyperliquid is going to fail for X, Y, Z reasons. And those failures are all protocol failures. They're all technical failures. They're all market failures in that sense.
Oracle failures, like, funding rate fail, like all of these design flaws that people have been pointing out. And so their view, I think, is that we could not have scaled this venue if we didn't make the design choices we did, which are aggressively skewed towards protecting the protocol over its users. And it's hard to run that counterfactual, right? But like, it has worked. So you kind of have to go, okay, fine. But this is the problem with crypto. Things work until they don't. If you start ripping the faces off your users and they all feel, aggrieved and that they were treated unfairly, they might leave. And if your users leave, then you don't have an exchange. And so there is a very, there's a tension here. I do understand Jeff's point, because what you want to avoid if you're running a venue is it would be far worse for them. And I don't think there's a perfect trade-off, right? But he is saying, if there's a 5% chance that the exchange blows up, right? And, HLP gets bankrupted and, the entire venue collapses, or a 5% chance that a bunch of my best customers have their brains blown out, he's like, yeah, sorry about your brains. Like, that's the choice that's being made here, right? Like,
yeah.
I appreciate that clarity, Tay. And
well, and I think this is what is going to be really interesting, right? Is like, okay, so now 1010 has happened. A bunch of people like lost big time. Moving forward, there is some amount of competition in this space, right? Hyperliquid, they sprinted and blew this market open, right? And so now you have all these other, upstarts that are peering. Some of those are going to be good enough on the technicals, and some of those are not going to be good enough, but they're going to be innovative. And probably at least one of them is going to do both, right? Where they actually are, structurally sound enough, but also have something that differentiates them. Now, if that differentiating factor around, say, like users and liquidations and those sorts of things, if that's good enough, they will then eventually beat Hyperliquid, right? Hyperliquid will just hemorrhage users to them. At some point, then Hyperliquid likely, depending on the exact mechanism or whatever, likely, starts to prioritize that to keep their users. And that's why, like, in my opinion, like, up until this point, Hyperliquid does, I mean, even today, I have a hard time saying that Hyperliquid has, like, a competitor in the same sense. Like, sure, you have Binance and that's like their competitor, but there's no reason for them to drop everything and pivot to users right now from like a economic logical perspective. In my view, they should, right? Because it's the right thing to do, because they can solve this problem. There's a lot of ways that they can go about it, and they're in a good position to do so. But I do understand why they might not.
But I think one thing we've seen, right, in the space, and we saw this in DeFi, is someone comes up with a design that they think is sound, right, and they've optimized for all of the right things, and Maker even, right, like leveraged ETH, borrowing against leverage ETH, etc. And then someone else turns up, forks it, and goes, "What if we just tweak these parameters a little bit and make it much better?" And 20 minutes later, it's smoking crazy. And so there will be an exchange, I promise you, that turns up and says, we are so much better for our users for these crazy reasons, and we haven't really thought it through. And, I saw one where they're like, we don't have liquidations. I read the kind of excerpt and I was like, this is insane. This is going to blow up. This exchange will last for
so what? They just like haircut everyone? Like, what is the mechanism?
They charge higher funding rates. Like it's, and I had someone send it to me. They're like, oh, these guys have no liquidations. And I'm like, you can't just have no liquidations.
Yeah. I mean, that's the
knee-jerk reaction. Yeah. It's like, oh, liquidations are bad. We'll just remove them.
Like whenever people are like, Drift has the whole. I don't know. Do you know, Kain? What's Drift's mechanism?
No, I don't know enough to speak.
It's basically like a slow TWAP out if you hit your liquidation price over like a fixed period of time, so you're not like completely obliterated. If for some reason you get wicked down, you maybe lose a little bit of your position.
And this, I think the Oracle, ultimately, unfortunately, like everything in DeFi, it all comes back to oracles. And so the Oracle design becomes really, really critical around like where do the Oracle prices come from? And again, Maker and Compound and Aave, like all of the Oracle design, Chainlink, Pyth, etc. Like this has all been Oracle design of like, how do we know what the price is? And if you tweak the way the Oracle price moves, then you get different results. So, but that's a very different story to say we have liquidations, we just have a slightly different design. An exchange showing up and saying we have because the problem is you say we have no liquidations and everyone goes, oh, amazing, let me go and trade over there. And then it's like, oh, actually there are downstream consequences of not having liquidations when everyone loses all their money.
Okay, hold on. I found the drift. This is actually interesting. Okay, so they trigger liquidations based on Oracle price, not mark price. That's number one. Number two, they block liquidations based on 50% divergence between Oracle and the Oracle 5-minute TWAP. And then three is they perform partial liquidations over an extended period of time, for example, 10 seconds. And then obviously they have insurance and stuff to cover any losses from like bad debt, et cetera, et cetera. So it seems like maybe they've just prioritized how the liquidations happen by taking the edge off, basically.
Yeah, right? It's just soft liquidations. But the challenge here, right? The trade-off is, Jeff and the Hyperliquid team are not idiots, right? Like they have sharp liquidations because they are worried about blow-up risk, right?
Yeah.
Like, and so, you look at a system like that where the liquidations are soft and you go, okay, what are the trade-offs? What happens if we have soft liquidations? Well, there's a couple things that can happen. A huge price dislocation that's real, like Bitcoin decides that it's worth 40K now while we're on this call, right? And soft liquidations, the exchange blows up. Yeah. That's just what happens. If you have soft liquidations and the price goes down to 40K in the space of a 5-minute candle, and you were slowly liquidating people based on a TWAP, and you had some kind of circuit breaker or whatever, unfortunately, circuit breakers only work if you control all of the trading in a single venue. Like the NASDAQ can say, hey, sorry, guys, we're not allowing Tesla to trade for 15 minutes so you guys can cool off a little bit. But if there are 50 different places where Tesla is trading and 49 of them are like Tesla's worth $2 and one of them's like, no, bro, like that's the wrong price. Like stop trading for a minute so you guys can figure out what the real price is. The 50th one is going to have a bad time when it switches back on and people are going to be mad. So, all right, let's move on though, because I'm sure we'll be talking about Hyperliquid and perps dexes every week for a while. Multicoin decided to go long Ethena, and this is a bit of a first of all, I'm a big Ethena bull, so I'll just say that at the outset. The reason why this story was kind of surprising to me, Kyle came out and said, "Hey, we've been buying Ethena for the last some period of time," right? So first of all, they've been buying Ethena while the price has been going down. And I always love when Multicoin loses money. So that's even though I've also been losing money, I couldn't help but be like, oh, okay, that I like that.
What's the beef with Multicoin?
So maybe I'll get to the second part. The other reason why the story was interesting to me is Multicoin in 2018. So they turned up to DeFi. And they were like, okay, they were big ETH bulls. And then they switched off. They became not ETH bulls. They went and did Solana and EOS and a bunch of other things, right? And they turned up in like late 2018. And they were like, okay, DeFi, cool. It seems like you guys have survived. Congratulations. Like, you've got 10 real projects here. Instead of saying, why don't we turn up and invest in all those projects and like help to support them or whatever, they literally were like, who is building the exact same thing that we can fund to attack all of these projects? And we were just like, what the hell is wrong with you guys? Like that, like it was just, and so it's quite funny to me that Multicoin chose to invest in Ethena over trying to fund Ethena killer, because that was their MO for a really long time. So I don't know if they've like lost their minds or pivoted or whatever, but as a VC funding the blank, like as a VC funding a Pengu killer, and I'm sure there's a few out there or whatever that are like, oh, we're going to be better than Pudgy Penguins and Pengu for reasons, right? It's just positive EV. If 10 people turn up and say, we're building the next Pudgy Penguins, we're going to do all of this stuff, we're going to be in Walmart too. I'm also, a tall guy who's young and dynamic, and like, they literally like they'll roll them out, right? And there's like 10 of these dudes that are like all like, like they've got like the plush toys and everything. And Multicoin's like, yeah, we'll fund every one of you guys. Let's go. And they will invest at like a 20 mil val, and they're like, we only need one of these things to pay off. Meanwhile, you're like, bro, I've been grinding for 4 years here. Like, why don't you give me some money to actually scale this thing that's already working? Like, why are you funding these guys to come in and pretend to be me and fork me and take me down and whatever? So that's why it was interesting that Multicoin said, actually, you know what? Fine, we'll invest in something that already exists on market.
Like, definitely empathize with your energy, given that context. Obviously, like I'm, I support the Multicoin guys just because they've supported us in the past, but that's good context. And anecdotally, I feel that because I've been very upset in the past, just personally having guys that do really support us who haven't done exactly that, right?
Yeah.
Trying to make a place better.
Yeah, like someone's like, we've got even bigger plush toys, and our founder's 6'8". Like, what do you think about that, huh? And it's like, wait, what? Like, because it's just in crypto.
They'll fund deals that are not even that compelling is the crazier part. That sounds pretty compelling, but they'll fund deals that are like a fraction as compelling as that. I mean, if that was the case, maybe I'll let them. But some of these guys are doing way worse.
Yeah, fair. So anyway, so I think, well done, Multicoin. I have to give credit where credit's due. Buying liquid tokens on market of something. I think maybe we should just explain what Ethena is quickly for the audience. So Ethena is a project that actually came out of this is interesting lore. So Arthur Hayes wrote an article in 2023 and was like, what we need is a tokenized basis trade. So without going into too much detail, effectively tokenizing basis trade just says when funding rates on perp exchanges. So Arthur Hayes is the founder of BitMEX, and so obviously he thinks about funding rates a lot. And he was like, if we tokenize the Bitcoin basis trade, you could get yield from people who were effectively paying to go long Bitcoin. So all of these degens that are long Bitcoin, 10x, 20x, 50x, 100x long Bitcoin are paying for that, and we could tokenize it and get yield from a stablecoin. Now, that was both genius and retarded, because you can't tokenize the basis trade for Bitcoin very easily. And we have this network called Ethereum where like it was such an obvious play. And so Guy from Ethena is like, okay, except for the Bitcoin weird, voodoo magic stuff where you're going to like build some technology there, we can just do this on Ethereum. And so he built Ethena, and it became this huge project. I think they're like $6 or $10 billion in stable coins. Like it's an incredible growth in the stablecoin TVL. And obviously, because it's crypto, a bunch of people were like, "Oh, we can tokenize the basis trade better than you," and came out trying to build these yield-bearing stablecoins. But Multicoin's doubled down on the leader, which feels pretty good.
Yeah, I like it. I like whenever somebody.
What's your history with Multicoin? Multicoin supported you? What's?
I think they've been friendly. I've been, when I first did Pengu, that whole Solana ecosystem really rallied behind me.
Of course.
And so Kyle was, I don't know if they ended up buying, but he was supportive and he wanted to invest in early. And, I told him that it's not this really what it was. But, anybody that I think pick up the, because building an Ethereum land for so long, like no one picked up the phone. So when I hopped in Solana land, right, and I started, and then like literally the top 10 figureheads of Solana all got on the phone with me and gave me advice. I respected it and I appreciated it, to say the least.
You're saying
no, but that's by the way, as controversial.
Yeah.
I will say this: Kyle is. Like, I will rage against him. You can go search Twitter. There's like years of beef. But I have like endless respect because like when he goes in on someone and he goes in on a lot of people, he is actually like a viciously great supporter. 100%. And so like if he's on your team, like, and I have respect for that. Like he's not going to back down. So as much beef as we have on the edges, like fundamentally, like, I don't know. I can't like deeply hate him or anything.
Yeah, same energy. It's funny. I sat there with him at Ethereal conference in 2018, and he was literally the only guy bidding ETH then. Yeah. He had a bunch of cash and he was bidding ETH, and I was like, wow, actually, so I have a weird love-hate relationship with Kyle. Like he does some stuff where I'm like, this guy's amazing, and then he does stuff where I'm just like, what are you doing?
How does Ethena blow up? Right, like what is the black swan? I mean, you'd think 1010 would have really pushed the boundaries on that. I actually put a lot of size. Because of Luna PTSD, but actually, like earlier this month, I put a lot of money in Ethena for the first time because I was like, if they were going to blow up, they were going to blow up on 1010. What is the black swan scenario for Kain, just so I can underwrite my risk?
Yeah, so I think the interesting thing is it was actually the USDE depeg that a lot of people kind of point to as one of the factors on Binance where, again, the Oracle price versus what the actual price was, et cetera. And it always comes down to Oracles. The black swan risk, I think, that people talk about is that it will be hard for Ethena in a volatile environment to unwind all of the positions that they have that are backing the stablecoin, right? So they're delta neutral, which means they're not exposed directionally to the price movement of ETH, but they do have these constructed positions where they're long ETH and short ETH, and that's how they get neutral. It's not like they're just sitting in dollars in a vault somewhere, right? That's where the yield comes from, though. The difference in cost of holding ETH versus shorting ETH is where the money comes from. And so they need to unwind those positions. So even though in theory all the money's there, right? I think 1010 was interesting because it exposed something that I would have said people were underappreciating in terms of risk. Like what happens if there is some huge ADL event, right? So and again, auto deleveraging is basically we don't have enough money to pay the winners on the exchange. So, you had a winning position, and instead of getting 100% of your win, you're only going to get 80% of your win. Now, the risk for Ethena there is they have a position that if they don't get paid 100% of it, all of a sudden the stablecoin is not backed, right? They have to get paid 100% of it. And so this is another place where some FUD came out where I think there were rumors, I don't know if it was actually confirmed, that Ethena had a deal because they're not leveraged. They're 1x leverage. So this is a position that they have that is not on margin or whatever. They're not borrowing. So they have a deal where they can't be auto deleveraged. Is the rumor? I don't know if it was confirmed, which means they didn't lose money. But in theory, if something really, really bad happened, they could be, they could be in a position where their delta neutral position suddenly becomes directional. And this is what happened to a lot of the market makers and why they lost money, and why you're seeing market makers complaining about 1010 so much even today, or liquid funds. Like anyone who's still griping on the timeline about 1010 lost a lot of money is basically the theory, right? And so I don't know what they expect to come out of the griping. I think they're just griping on the timeline. But if you had a position where, let's say, you were long Bitcoin on Binance and short Bitcoin on Bybit, 1010 was a bad day for you because in theory you were farming the funding rate, or you're trying to some arbitrage play or whatever. But one of those venues kind of blew you up. And so your position ended up being directional, which is not what you want if you're a delta neutral. If you're trying to hedge the price exposure, and all of a sudden you're exposed to price exposure, and all of a sudden the prices are moving wildly, it's going to be a bad day for you.
Yeah, and I think Ethena generally, like super generally, the black swan is like a combination of like I think it's predicated like you have the bear market. And so the funding rates are negative or whatever for any amount of time. And then you have something happen where you have a gap that's created, or obviously like there's counterparty risk theoretically, although they've mitigated a huge amount of that, like it's still a thing. So then you have like, this triggering event, let's call it, that's, something blows up somewhere. And then due to probably like the more long-term market conditions, as people are trying to pull out, as they're trying to unwind the positions, as they're trying to get, back into sane territory, one, it just takes a minute and they can't. And two, the direction of the market is like further impacting them, right? Because like when you're unwinding positions, the money is moving around, which means that you're going to have an impact on the market, and if you're in that position where your own actions, right? This is like Terra, right? They're like, unwind as fast as we can. But every time you unwind, you're making the situation worse. Yeah. Right. And so I think that's generally, I guess, like the biggest fear. Again, they have taken a lot of steps. I think they've taken a lot of steps to try to mitigate this. Like
they have. They have. I mean, it's the same thing as like Lido, right? Wrap staked ETH. Wrap staked ETH is a tokenized version of ETH that gets yield from being staked in proof of stake, right? The problem is to unwind a staked ETH position, there's a cooldown period. So you're going to be sitting in the withdrawal queue, and sometimes the withdrawal queue to get out of staking is short. Sometimes it's long. You can imagine it might get much longer if all of a sudden people really needed that ETH that was in the staking pools because they had a position long Bitcoin that was getting wrecked that they're trying to like cover the margin for, right? And so in a market that's dislocating, you can get these weird duration risks. Basically, like, I need my money 10 seconds ago, and you're telling me it's going to be 30 days. And in that 30 days, bad things will happen. And so then at that point, I'm like, I don't care about your 30 days. I'm willing to sell at a 20%, 30%, 50%, 99% discount because I need every single penny that I can get to go and defend a position over here. And so anytime there's any duration risk where it's like, hey, Luca, I'm going to give you, $1 million for a month. And then 20 minutes later, I'm like, actually, I need it. And you're like, sorry, bro. Like, you said I could have it for a month. And I'm like, no. Like, how much can you give me? And you're like, 0. And I'm like, dead. Like that's duration risk. And I'm like begging you. I'm like, just give me $5. And you're like, sorry, I can't do it.
Yeah.
So.
Or you're like, I'll give you $1
I'll give you $1. And I'm like, oh. Can you make it $2, please? So that's it for this episode of Uneasy Money. Thanks for tuning in. If you like the episode, follow us on the Unchained feed on X, YouTube, or wherever you get your podcasts. We'll see you next week.
Bye, guys.